Good afternoon. I'm David Perrin and Human Resources Director here at the Oregon Conference. We are rolling out a new benefit, long-term care insurance, and it's a benefit that has been provided through the North America Division. And we are pleased to have Diane Steeves from LTC Financial Services here, and she will be presenting the topic of the new benefit. We have an open enrollment period that will be ending on May 2. So this is an important benefit, and we do have a window of time that you're able to enroll. So Diane, we're glad to have you here.
Thank you, David, and I appreciate the opportunity to be here today to roll out the Adventist Risk Management Long-Term Care Program. So before we get started, just know that this program is being brought to you in part because Adventist Risk Management has realized that we're facing a national challenge, because a lot of people have done their planning for the retirement and found out in the end that there was a gap that exposed them to the cost of long-term care. So that's the gap we're going to try to fill. And what we're going to do is to talk about how the plan is structured. So long-term care is assistance or supervision that's given to a person that has something physical happen or cognitive that just causes them to lose their independence. It can be caused by an accident, it can be caused by an illness. It doesn't just have to be caused by becoming old. So what we want to do is to first understand what long-term care is, and then figure out how it can impact both our home life and our financial future. So when we have a long-term care need, we have activities that we're not able to do. We need help with bathing, we need help with dressing, moving around our home, maintaining continence, or even being able to take care of just the simple little things. Or it may be that we can do all those things, we just forget to do them. So that's what long-term care is. And we know that the care takes place in many different locations. 85% of long-term care begins at home. So we're not talking about going to a nursing home. Very few people go to nursing homes. 15% of the people receiving benefits in the United States today are in a nursing home. Most people are where you would want to be, at home. So your home, somebody else's home, or possibly an assisted living facility are the places that most people receive care. When we do our retirement planning, the reason that we've forgotten about long-term care planning is because we haven't realized what it was or how it could impact us. We were simply thinking in terms of accumulation, whether we had a 401k, IRAs, we had savings that we were accumulating, we had property or real estate, maybe in the family for a long period of time, but that's what we based our retirement on. What we never focused on was, how am I going to preserve? So we need to think as much about preservation of our retirement as accumulating it, because the average American family loses most of their life savings within the first 9 months of a long-term care visit. The talk about long-term care almost becomes a conversation about stewardship, because through your lifetime you've been a good steward of the resources that the Lord has given you, and most often they were things that you found out about, and you had wise decisions about what you wanted to have. But many people, because they didn't know about the risk of long-term care, haven't planned for that, and unfortunately were hurt in the process. Usually we plan or we insure for things that have a catastrophic risk of impacting us, or just an inconvenient risk. We insure our home, even though it's a very low risk that it's going to burn, 1 in 1,200. We insure our car, a little bigger risk, but again, 5 in 1,200 chance we're ever going to total our car. When we get to the place of medical insurance is a higher risk proposition, because there's a 10% chance every year that you're going to need to go to the hospital. But the greatest insurance risk that you will ever face is the risk of needing long-term care, because if you reach age 65, there's a 70% chance that you're going to need long-term care sometime in your lifetime. If you reach 75, that goes to 90. Long-term care isn't a conversation about if it's going to happen. It's a conversation about when it's going to happen. How am I going to pay for it? So from today forward, please think in your mind, if something happened to myself or my family today, how would we pay the $3,000 to $5,000 a month that a long-term care event would impact my family with? Maybe you've planned for this, but if you haven't, that's a question you need to write down and continue to ask yourself. Unfortunately, the thing I hear most often are all the reasons why people don't want to think about that. The one that's most common, I'm too young. I don't need to worry about that. I'm in my 40s. I'm in my 50s. Man, I just turned 60. But at the end of the day, what we know is that 40% of the people that are using long-term care services in the United States today, 12 million people, 13 million people, that's gone up. That's important to know. 13 million people already need help with long-term care services between age 18 and 64. So what happened to this younger group of people? Most often they had accidents, car accidents, sports accidents, or cerebral vascular accidents that left them unexpectedly disabled with family expenses still on the table. They were active, working age adults that all of a sudden had to figure out a way to continue to support their family, but also pay for the cost of long-term care. You are never too young to plan for long-term care. Oh, it's never going to happen to me. I mean, we've got a long family history of just being healthy and going to sleep one night and not waking up. But again, things do happen. Things happen when we're younger because of lifestyle choices. We ride motorcycles, we go skiing, we have activities which may even be extreme sports. But the most common causes that we think about are related to being old. We have strokes, we have heart attacks, maybe cancer. But if you think about the workplace where you are right now, you know people that have had some of these problems. Maybe diabetes, maybe early onset memory problems, or people that fall down and have a fracture and they're unaware that they had osteoporosis. So this is something that's an ongoing awareness, but the common causes of long-term care don't have to occur when you're older. Many occur before you even reach retirement. You know, I think it's covered by insurance that I have already, so I don't need to worry about that. Well, here's the big announcement. On this little grid, anything in gold is something that might be covered by medical insurance before 65 or Medicare insurance after 65. But when you look at the top line that talks about skilled care, only 100 days of a problem that might last 3 to 5 years is ever covered by Medicare, and then only as long as you are receiving skilled service in an approved facility. After day 100, nothing is paid toward the Medicare expenses. There are 60 days of intermediate care. That would be like your physical therapy, maybe some speech therapy, occupational therapy, but the whole of the long-term care continuum, the bottom box, a solid purple line, custodial care, the bathing, dressing, eating, grooming, help managing continence and transferring, none of that is covered by Medicare or medical insurance because it is not medically necessary. They only pay for things that are medically necessary. So that's the gap in our insurance. It only pays for about 35% of what long-term care might be about, and you are responsible for the rest. Again, Medicare is a formula that was created in 1964. We pay into it during our working years, but the focus of Medicare is not to care for you, it's simply to cure you. It's for acute medical problems. It's designed to pay for hospitals, doctors. As soon as the skilled service is not needed, you're discharged. In order to be successfully discharged to a skilled facility, you have to have been in a facility for 3 midnights, 72 hours to get Medicare to pay for skilled care in a skilled facility. And then you only get to stay in that facility as long as you are making progress. My dad had a brain surgery a couple of years ago, and he went from the hospital after a 7-day stay to a skilled facility in Portland, and he was sleeping through almost the whole first 20 days. The first 20 days are often covered at 100%, but after day 20, they begin looking very closely, and by day 25, we got a non-compliance notice that he needed to be discharged because he wasn't getting better fast enough. If you were in a coma, you would not even get coverage to day 25. So many of the things that we think we know about Medicare, we don't. Because the goal of Medicare is to get you out of care as soon as possible. And even though there's a 100-day window that they will pay for care, their average payment is around day 25. Medicaid is medical welfare. It isn't an entitlement program like Medicare. You don't have a right to have it simply because you paid into a system. Medicaid is a system where federal money is given to each state, and they give it to you in response to need after you have spent down all of your assets. So in this state, you have to spend down to the $2,000 poverty level. The thing that's most interesting when I talk to families that had Medicaid bills presented to them about 9 months after their loved one passed away was that every cent that was spent in the nursing care facility, which they thought was free, was charged. And they had a bill presented just like federal taxes that have to be paid within a certain period of time. So most Medicaid is given in a skilled facility or nursing home. Again, the one place you don't want to go. So please be aware that Medicaid is not the solution to long-term care planning. Well, I've got disability, and I know that we have a good disability policy, so that's going to take care of me. We're wrong again, because disability insurance is income replacement. It's designed to give you tax-free income if you have a disability during your working years, but once you retire, disability insurance goes away. It may change when you go from one employer to another, but for sure by the time you're 65 and going into retirement, that policy is no longer available to you. By contrast, long-term care insurance is just getting cranked up. It's designed to pay for the care itself, not replace your income. It's something you take with you even after you retire, and the coverage continues throughout the rest of your life. I think I'm going to wait till I'm older. The cost of waiting is very, very high. In fact, the program that we have available through the Oregon Conference right now that is going to be payroll deducted is something that was grandfathered in to an already changed format. So the pricing that I have to show you is going to be different after May 2nd. So we have the enrollment May 2nd deadline because we have to get all of the applications from qualified employees, their spouses, or other family members into the system so that we qualify for the plan that is no longer available. So this is a one-time offer. It's something that we can sit down and create for each person if they want to have a response. There will be information about how to get in touch with me from HR available with this tape. But the thing that's interesting, the longer you wait to do the long-term care planning, the higher the premium's going to be. You're going to have to buy new coverage, and the thing that's interesting is in the new policies that are out there after May 2nd, most policies are charging more for women. So to avoid that future charge, please try to qualify during this enrollment period. The other thing is when you go out in the market, and I sell long-term care insurance other than at the work site, I have to ask you a lot of medical questions. To qualify for this plan, employees answer only 5 medical questions, and females pay the same as males in this plan. Well, I don't want to go to a nursing home, so I'm not going to buy long-term care insurance. You know, I've been doing long-term care planning for 23 years. At a time in our life when my husband and I were 42, we had never heard of long-term care insurance, and we found out the hard way by spending down most of our accrued retirement that you can't buy long-term care insurance when you're already sick. It's like trying to buy fire insurance when the fire truck's sitting on the driveway. The best advice I can give you is that long-term care insurance is the best guarantee. You're never going to go to a nursing home because you have other options. Most of the people that need care are getting it in a community setting, combination of family, friends, and caregivers in the home life that we always envision for our retirement. The thing that's sad to me is when I'm talking with people and they already have medical problems which we can't insure. So you have to be prepared for lifestyle changes. This is a planning process. That means you have to put out a lot of different options. We are able to sit down with a computer and create spreadsheets for you so that you have many different choices, but it's something that you can have a small plan now and have it grow over time, or if you're already in a position where you're concerned you may need more coverage, we can suit it to that as well. The plan itself is comprehensive coverage. It's 100% coverage whether you're at home, assisted living, adult family homes. We call them foster care in Oregon. Other states call them congregate homes. But at the end of the day, we are going to do payroll deducted plans for employees and spouses. Family members I can set up in a private pay setting like on a credit card or through a bank draft. The plans are fully portable so that when you're no longer an employee, you take the plan with you and you just establish a new way to pay for it outside of the payroll. Long-term care insurance is tax deductible on a federal tax return, and for those of you that live in the state of Oregon, long-term care has a tax credit against your state income tax. So whatever you pay in premium in a year, 15% of that, up to $500, can be used as a direct credit against your state income tax. The policy that we're creating have discounts. If two people in a couple apply at the same time, there's a 30% discount on both policies. If you have a spouse but they're not going to apply, you still get a 10% discount. The simplified underwriting means that employees simply answer 5 basic questions, which mainly are you already disabled? If you're not already disabled and you can say no to those questions, employees simply get policies. For people that are spouses, there's a few additional questions like what are your prescriptions, who's your doctor, and when was the last time you saw them, but it's also very simplified format. And family members have the same underwriting as spouses do, so it's not the full underwriting that you would see when you're applying for other insurance. It's very much simplified. The program that we're using is Life Secure Insurance Company. It's Blue Cross of Michigan. It was selected by NAD because of its actually flexibility at the work site. It allows me to travel from here to Walla Walla and go to all the smaller congregations and be able to sit down with a few people or many people and get them enrolled in time to meet the deadline. It's an excellent company. It's highly rated, and they've already done the due diligence for us. So many people spend a lot of time checking into insurance companies. In this case, that was done for you, so that's a great thing. One of the things that's interesting is that most couples are better served if they sit down and talk to me together. So if I sit and talk to one of them, then we have to, do it again when we talk to the other person. But you'll be able to see, we can have an online appointment. I don't need to come and meet with you face to face. Just like this presentation, I can send you a link, you'll connect to my computer, and we'll be able to go through the entire process of doing the premium calculations and then helping you to complete an application. So it can all be done remotely. Doesn't have to be in person to person, but if you like person to person, I'm happy to try to do that with you as well. We try to be as flexible as possible. Again, simplified underwriting, 5 questions. Are you already disabled? And those do not include height and weight. If you wait till after May 2nd, they are going to have height and weight questions for even employees. They do look at the last 12 months of prescriptions that you have filled, even if you're an employee. They do look at that, and if there's a question about a prescription, they may call you. But we're turning these policies around pretty quickly, which is something that means that you'll know exactly what you have pretty quickly. You get a hardbound policy delivered to you at home, or I'll deliver them if you'd rather have that. So there's an opportunity for you to take a look at it, call me and ask me questions, and most people are doing that, so that's working out really, really well. The next thing you need to do is to let me know if you want this information. Today is April the 9th, and we have until May 2nd, but actually I have to enter all these into the computer, so if you wait till May 2nd, it's going to be a real rush job. So please get in touch with me. David Perrin at the HR department has all of my contact information. It will be something that I will be able to give you a pretty good idea if you've had some current medical problems. You know, it's interesting, in underwriting for insurance, most companies put you into a preferred category, a standard category, or maybe a select category. What we're doing here as a group, we have a multi-life rate. So we don't care about people's medical problems in the same way. If you have generally good health and you would qualify somewhere between the preferred status or the select, you would be able to get a policy. Here's an example. People say, well, what do you mean by preferred and select? I said, well, for someone that's 5'7", which is what I am, I could weigh anywhere between 109 and 269. Hopefully I'm well within the bounds of that and still get a policy. So there are people that are concerned about different medical problems, and I'm happy just to very honestly tell you whether I think that you'll be able to qualify. Employees, easy qualification. We have easy plan design. I'm very aware of affordability. When we've been working up at Walla Walla University, we've had a lot of younger people buy policies that had very strict budgets, and I'm very mindful of that. So the next thing you have to do, apply for coverage. And I hope that you will give me a ring. You can reach me by email, you can reach me through website. David has something on the benefits department website for being able to reach me. But I hope we hear from you and that I have time to reach out to you before the end of this enrollment. I look forward to hearing from you, and again, thank you for letting me be part of the Oregon Conference Long-Term Care Program. Thank you.